Ladies and gentlemen, thank you for standing by and welcome to the Ironwood Pharmaceuticals fourth quarter and full year 2020 investor update conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you'll need to press star 1 on your telephone keypad. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker today, Meredith Kaya. Thank you. Please go ahead.
Good morning, and thanks for joining us for our fourth quarter and full year 2020 investor update. Our press release crossed the wire this morning and can be found on our website. Today's call and accompanying slides include forward-looking statements. Such statements involve risks and uncertainties that may cause actual results to differ materially. A discussion of these statements and risk factors is available on the current Safe Harbor statement slide, as well as under the heading Risk Factors in our quarterly report on Form 10-Q for the quarter ended September 30th, 2020, and in our future SEC filings. All forward-looking statements speak as of the date of this presentation, and we undertake no obligation to update such statements. Also included are non-GAAP financial measures, which should be considered only as a supplement to and not a substitute for superior to GAAP measures. To the extent applicable, please refer to the tables at the end of our press release for reconciliations of these measures to the most directly comparable GAAP measures. During today's call, Mark Mallon, our CEO, will begin with an overview, followed by Tom McCourt, our President and incoming interim CEO, who will review our strategic priorities and commercial performance of LINZESS. Then Gina Kunselman, our CFO, will review our 2020 financial results and provide guidance for 2021. And finally, Mike Shetzline, our Chief Medical Officer, will provide an overview of our current focus on GI innovation. We will close with a Q&A session. We will be referring to slides via the webcast. For those of you dialing in, please go to the events section of our website to access the webcast slides. With that, I will turn the call over to Mark.
Thanks, Meredith. Good morning, everyone, and thanks for joining us today. Let me begin by saying how proud I am of the entire Ironwood team, who truly showed their passion and commitment throughout 2020 to advance treatments for GI diseases and redefine the standard of care for GI patients. Their passion and mission-driven approach is one of the things that has most inspired me during my time with Ironwood. As I shared last week, deciding to leave Ironwood wasn't easy, but the chance to pursue certain passions of mine is really the right decision for me personally and for my family. I'm confident Ironwood will be in great hands with Tom as interim CEO while the board conducts its search. Tom has been an incredible colleague of mine for many years and a key member of the leadership team since joining Ironwood in 2009. In addition to his many accomplishments over the years, he led the successful launch and commercialization of LINZESS. Despite the challenges of the COVID-19 pandemic over the last year, Ironwood's business fundamentals and financials are strong. We believe the resilience and strength of LINZESS, combined with the continued profit and cash generation in 2020, provides a solid foundation for the future. I'm confident Ironwood is well positioned to deliver value for patients and shareholders. Turning to our 2020 performance, we began 2020 focused on our 3 core priorities: to drive LINZESS growth, advance our GI portfolio, and deliver sustainable profits. LINZESS continues to be the prescription market leader within its category, demonstrating exceptional growth in the brand's 8th year since launch. Additionally, Ironwood has now delivered its 2nd consecutive year of profits and ended 2020 with over $360 million in cash, more than doubling our cash position from the end of 2019. Turning to our pipeline, the results from the 3718 and 7246 clinical programs were disappointing. These were 2 distinct programs that were being developed to treat high unmet medical needs and represented an opportunity to potentially help millions of patients. While these types of outcomes are not uncommon in drug development, they are certainly never easy, especially when they affect our own teammates, as these did with the recent workforce reduction. We were pleased to receive the approval of lenaclotide sNDA for overall abdominal symptoms data in adults with IBS-C, as well as the progress of our ongoing pediatric studies. With several GI diseases in desperate need of new therapies, continued scientific progress within this category, and our unique expertise and capabilities, the team is focused on finding and advancing innovative treatments for GI diseases. I'm proud of the strong foundation we've built together. All of you at Ironwood are true champions of the GI community, and I'm privileged to have worked alongside you. I look forward to following Ironwood as it seeks to drive continued success. With that, I'll turn it over to Tom. Tom?
Thanks, Mark, and good morning, everyone. I look forward to serving as the interim CEO following Mark's transition as we build on the strong foundation we have in place. Our path forward strategy begins with maximizing LINZESS. We believe there's substantial opportunity for continued growth and are working closely with our partner to deploy innovative commercial strategies and enhancing the clinical profile through lifecycle management. Second, we're focused on building an innovative GI development portfolio by pursuing assets that target serious organic GI diseases. We maintain a disciplined approach to exploring and assessing potential new assets, including applying a focused set of criteria and a high bar for any potential deal that we may consider. We believe our new refreshed approach has the potential to drive our business further and faster, and with the potential for providing great benefit to patients we can serve. And third, we seek to continue to take a thoughtful and disciplined approach to capital allocation in an effort to continue generating sustainable profits and cash flow. We're steadfast in our mission and, importantly, remain focused on our goals of driving value to shareholders by bringing important medicines to patients and building a growing and successful business. Now let me turn to the commercial performance. In 2020, LINZESS showed incredible strength and resilience in the face of the pandemic, further strengthening its position as the #1 prescribed medicine in the U.S. for the treatment of adults with IBS-C and chronic constipation. LINZESS prescription demand grew 8% in the fourth quarter and 9% for the full year 2020 year over year. This strong performance translated into full year U.S. net sales of $931 million, a remarkable achievement. And we are seeing strong LINZESS demand growth continuing into the first quarter. And while it's still early, we're very encouraged by the performance thus far. We believe LINZESS remains on track to exceed $1 billion in U.S. net sales, with several additional opportunities to drive further growth. The brand hit all-time highs in new-to-brand prescriptions in the second half of 2020, reinforcing that patients and healthcare practitioners continue choosing LINZESS for appropriate patients despite the pandemic-related limitations. We also saw an increase in 90-day prescriptions as a percent of our total business. In the fourth quarter, 90-day prescription demand was 20% of our business versus 17% during the same time in 2019, meaning on average, more total pills per prescription. The brand's success to date in the U.S. has come through consistent, strong execution of the commercial strategy that's grounded in 3 core fundamentals: increasing awareness of LINZESS amongst physicians, motivating appropriate patients to seek care and request LINZESS, and securing broad payer access. Moving forward, we intend to continue to focus on these core fundamentals, but to execute in new ways in an effort to further maximize the LINZESS potential. First, to further support our clinical discussions with healthcare practitioners, we're working to strengthen the virtual selling capabilities we deployed in 2020 and create a hybrid selling model. We think this will be important capability for the future. In addition, we intend to build further awareness of the overall abdominal symptom data in adults with IBS-C based on the FDA-approved labeling update in 2020. We also intend to advance our efforts in telemedicine in light of the expansion of the use of telemedicine by patients and physicians. We're in the process of expanding our telemedicine efforts and capabilities and seeking to strengthen the impact in 2021. Since launch, there has been a significant focus on establishing broad payer access. As the prescription market leader in its category, LINZESS has wide, unrestricted access, and we seek to maintain this status as a key growth driver for the brand. Lastly, we expect to advance additional lifecycle management efforts for linaclotide. We believe we have a long runway to continue to grow, and we are currently evaluating opportunities for linaclotide, both with regard to new indications and new patient populations. With that, I'll turn the call over to Gina. Gina?
Thanks, Tom, and good morning, everyone. I am pleased to be able to highlight our strong financial performance for 2020 and provide our 2021 financial guidance. Please refer to our press release for our detailed financial information. First, touching on our 2020 financial performance. Ironwood total revenues in the fourth quarter of 2020 were $117 million, driven primarily by a 9% increase in U.S. collaboration revenue from LINZESS year over year, and $390 million for the full year, exceeding our 2020 revenue guidance. A reminder that 2019 revenues included $42 million in license and milestone payments and $49 million in sales of linaclotide API recorded in 2019. Beginning in 2020, we are no longer responsible for the supply of linaclotide API to our ex-U.S. partners. API sales during this past year reflected the remaining API shipments to Astellas and AstraZeneca per our amended agreements. Regarding LINZESS, U.S. net sales were up 16% in the fourth quarter and 10% for the full year 2020 year over year. I'd like to briefly comment on commercial margin in the fourth quarter, as it was lower than we have seen in previous quarters. This decrease is due primarily to an adjustment to selling expenses recorded during the period. During the first 3 quarters of 2020, only costs associated with in-person details were included as part of the LINZESS U.S. brand collaboration. Since we weren't able to execute as many in-person details due to COVID-19 restrictions, we saw a significant improvement in commercial contribution during those periods. However, we and AbbVie determined to adjust the selling expenses recorded in the fourth quarter to include costs incurred throughout the year related to virtual detailing and overhead due to the COVID-19 pandemic. As such, full year 2020 expenses are similar to our investments in 2019, and the adjustment simply reflects timing across the quarters. Looking ahead to 2021, we expect the commercial investment behind LINZESS to be in line with our investment in 2020, and we continue to seek to expand margins through growing LINZESS net sales and disciplined investment behind the brand. Turning now to Ironwood's profitability and cash. For full year 2020, our profitability was driven by significantly higher LINZESS net sales and lower operating expenses compared to 2019. GAAP net income was $106 million, and adjusted EBITDA was $161 million in 2020. Additionally, we generated $169 million in cash flow from operations and ended the year with $363 million in cash and investments. We are pleased to provide our full year 2021 financial guidance, in which we expect U.S. LINZESS net sales growth of 3 to 5%. We anticipate net sales growth to be driven by high single-digit % growth in LINZESS prescription demand, continuing its momentum for 2020, offset by mid-single-digit % price erosion resulting from certain contract changes going into effect this year. We expect total revenue of $370 to $385 million, mainly driven by growth in U.S. collaboration revenues and inclusive of approximately $10 million that we anticipate from royalties, co-promotion, and other revenue. And lastly, we expect adjusted EBITDA of greater than $190 million, with adjusted EBITDA continuing to be a proxy for cash generation as it was in 2020. We believe our continued financial performance, our current cash balance, and the numerous steps taken to strengthen our financial profile positions us well for 2021 and beyond. Delivering shareholder value is at the heart of successfully meeting our strategic priorities. This is a critical threshold for our investment decisions as we continue to invest thoughtfully into our business. Our capital allocation strategy is focused on maximizing LINZESS. As Tom mentioned earlier, we expect to continue to invest in opportunities to drive further growth in LINZESS. This is our highest priority and where we believe we can create the most value today. We are also leveraging our GI expertise in an effort to build an innovative pipeline by pursuing inorganic opportunities to diversify our GI portfolio. And lastly, we expect to continue to explore ways to deploy any excess free cash, including the potential for opportunistic share repurchases. Before I turn it over to Mike, I want to briefly highlight our renewed strategy to build our GI pipeline. We are focused on diseases that are largely managed by GEs, prioritizing organic GI diseases with well-defined pathology and where we have an opportunity to accelerate development within shorter timelines. In addition, we are focused on innovative clinical assets that already have demonstrated preliminary efficacy and safety. And finally, we seek to maintain our ability to deliver profits and cash as we have been doing. With that, I'll turn it over to Mike.
Thanks, Gina. I'll spend the last few minutes touching on the opportunities within the GI space and our own Ironwood 3300 program. We've been steadfast in our efforts to advance treatments for GI diseases, and over the past 2 years, with the past GI diseases over the past 2 years, and the learnings we've gained give us confidence in our fresh strategy to also explore earlier stage development opportunities in serious organic diseases. Through our recent assessment of the GI landscape, we identified over 100 GI assets across more than 25 disease areas that fit our new focus strategy. Through these efforts, we prioritized 8 disease areas with high unmet need and where we believe we can have the most impact. These areas where we've seen a lot of progress in the understanding of the disease, the pathophysiology, and the potential targets. For example, 2 of the disease areas we're looking at are pancreatitis and celiac disease. Pancreatitis is a significant medical need since, unfortunately, today patients are still treated with IV fluids and pain management, with no approved therapies targeting the underlying pathology of their disease. Celiac disease, where the pathophysiology is very well defined and the mechanism is well understood, and there are lots of opportunities to target new medications for patients suffering from this disease, still has no medical therapies. While these are just 2 examples, clearly there remains tremendous unmet need within GI. In conjunction with this strategy, we're also advancing 3300, a GCC agonist being developed for the potential treatment of visceral pain conditions such as bladder pain syndrome and endometriosis. 3300 is a stable and potent GCC agonist that provides a true opportunity to test the crosstalk hypothesis in humans. Crosstalk is a well-known biologic phenomenon where sensations or injury originating in one organ can cause altered sensation in a nearby organ because of overlapping nerve pathways. We believe this can result in enhanced pain perception affecting the bladder and reproductive organs in the pelvic area. We have strong preclinical data in a number of visceral pain models, including vaginal and bladder pain, that suggest the potential for GCC stimulation with 3300 to alleviate the visceral pain. We expect to submit an IND application with the U.S. FDA in the second half of 2021, putting us on track, if approved, to initiate a phase 1 clinical trial with 3300 in early 2022. We expect this trial will help us determine the asset's potential for further clinical development. I'll now turn it over to Mark for some closing comments before Q&A. Mark?
Sorry, I was on mute. Apologies, everyone. So thanks, Mike, for catching that, and thanks for the update on 3300. It's certainly an exciting opportunity for Ironwood. As you've heard from the team this morning, Ironwood has a significant opportunity ahead to advance our vision of becoming the leading GI-focused healthcare company in the U.S., and I want to thank the entire Ironwood team for a tremendous effort in putting patients at the forefront of everything we do. Thanks again for joining us this morning. Operator, Megan, we can now open the line for Q&A.
Certainly. At this time, we would like to take any questions you may have for us today. To ask a question, please press star 1 on your telephone keypad. Our first question is from Martin Auster with Credit Suisse. Your line is open.
Hi, Martin.
Hi, everyone. This is actually Mark on for Marty.
Great, Mark.
Thanks for taking my question. I guess 2 for me. I was wondering if you might be able to provide a little more clarity on your 2021 guidance. It looks like revenue guidance is roughly flat year over year, while you expect LINZESS U.S. net sales to grow 3 to 5%. Is that discrepancy due to higher AbbVie Ironwood commercial costs, or is there something else we need to consider? And I guess, are there any additional details you could provide on how we should think about these costs moving forward? And then the second question I have relates to, I believe generic Amitiza entered the market the other month. I'm just curious if you could kind of speak to what impact you have seen since it entered the market, and has it resulted in any pressure on LINZESS pricing? And if so, how does that impact on pricing compared to your expectations coming into the year?
So thanks for the questions, Mark. Tina, can you take the first one? And Tom, maybe you can pick up the question on Amitiza.
Sure.
Sure, I'm happy to. Thanks, Mark. So if I understood it correctly, I think you're asking about the decline in revenue, despite the fact that the decline in Ironwood revenue, despite the fact that we're guiding to increase LINZESS revenue. So maybe just a quick reminder that the Ironwood revenue includes a bit more than the collaboration revenue that we recognized from the LINZESS collaboration with AbbVie. The other revenue, for instance, in 2020 included a small amount of API sales. We had just a wrap-up of the API sales to Astellas and AstraZeneca in 2020. From the restructured arrangements in 2019, we actually had significant revenue in 2019 related to those agreements, and then a small amount in 2020. That's done now. At this point, it's wrapped up, and we're not expecting revenue to continue in 2020. So that's one part of it. And the other part of it is related to the $10 million that I called out as part of the guidance. The $10 million is included in the overall Ironwood revenue, and it's actually down a bit year over year, or expected to be in 2021 versus 2020. And that is in part due to the restructured Alnylam agreement that we mentioned as well. In 2020, we received fixed payments plus royalties, and in 2021, going forward, we're expecting to only receive royalties.
Got it. That makes sense.
Okay.
Mark, would you like me to take the
Yes, go ahead. Yes, Tom. Yep. Yes. Go ahead.
So yeah, you're absolutely right. Generic Amitiza, the single source generic, is now available. I think as far as its impact, its market share has been eroding over time. Keep in mind, it was the market leader when we entered the market, and obviously within the first 18 months, we were able to actually catch it and actually surpass it with regard to market share. And these, it's important to remember, these are very different molecules, and the overall efficacy and tolerability looks quite different. And the piece that has been driving LINZESS growth over time has been the high level of treatment satisfaction, both on the part of the physician and the patient. As far as pricing pressure, I think it's important to remember we've been playing in a generic market since we launched with generic PEG, and so there's been multiple generic options available to patients. And I think it also is important to note that the far majority of patients still continue to be treated by OTCs, even though they're not satisfied, and that's really where our source of business comes from. We all anticipate further pricing pressure from a variety of areas, including the government. But as we've mentioned before, this year we guided to stable price, which we realized. Next year, we did shore up a couple of contracts, so there will be some price erosion that Gina had mentioned. But I think the most important thing is how healthy the brand is. And when you look at its demand growth, its ongoing demand growth, and what we're seeing, certainly as we finished last year and we're heading into this year, I think we're very confident in the ongoing viability of the brand in the marketplace.
Great. Thanks for taking my question.
Your next question is from Eric Joseph with J.P. Morgan. Your line is open.
Hi, Eric.
Hi, good morning. Thanks for taking the question. I guess just one following up on, really, as you're thinking through potential transactions in the organic GI space, I'm just wondering if there's any further color you might be able to offer in terms of stage of assets that you're looking at in transaction size, and whether there's any potential impact, I think, on executing on a potential transaction from the change in leadership here. Thanks.
Eric, could you repeat that question? Because I don't know about the others, but it broke up a little bit and it was hard to hear.
Sure. Can you hear me now? Sorry about this.
That's better. Yep, that's better. Thanks.
Okay. Yeah. Just wondering if there's any further color on potential transactions that you're thinking about in the organic GI space, particularly around size of a deal and stage of development in a target asset, and whether the change in leadership might have any impact on timing. Thanks.
So, Tom, why don't you take sort of how you're seeing the sort of organic opportunities in GI, and Gina, certainly jump in with any thoughts you have as well. And Tom, you can also address the question about strategic direction at the end.
Yeah.
Go ahead, Tom.
Sure. Yes, as both Mark and Gina mentioned, we're really focusing on these serious organic diseases. We've identified a number of assets, as Mike mentioned, and most of these are held by fairly small companies with limited development expertise and essentially no commercial expertise. So obviously, we're really focusing on particularly assets that we can leverage our internal expertise to accelerate time to market. So we're really looking for an asset that, where there's clear incremental value to be created. So we have a very high bar. We've looked at a number of assets to date, but we will continue to strive to make sure that it is the right next move for us as far as where we're going. I mean, obviously, it just builds and is very complementary to LINZESS with regard to the commercial model. But obviously, Mike and his team bring very deep scientific and medical expertise to make a good choice, and then obviously working with Gina's corporate development team to make sure we get the right deal done.
Sure. Thanks, Tom. I mean, I might just continue to add, I don't expect it to impact the leadership change to impact our ability to be able to continue to execute, hopefully, on transactions this year. One, I just have a lot of confidence in Tom, especially working with him over these last 7 years plus. In addition to the fact, that Julie has stepped up and is giving us additional time as executive chair. So I think the combination has put us in great hands. I would also just remind you that, we just talked a little bit on the last question about, that small amount of revenue and the fluctuations, in API and royalties, for instance, or milestone payments. But the core business is strong. So the collaboration revenue related to LINZESS is incredibly strong and growing year over year. And with that fundamental for growing revenue of our core business and cash generation, it just positions us in a great place to be able to have the financial capacity to be able to not only, afford the upfront related to a development stage asset, but also gives us the ability to continue to fund it through development and gives us the P&L space to maintain profitability at the same time.
Yeah, Eric, I just want to add one more thought about sort of the readiness of the team to continue to execute. I don't think I've seen Ironwood more ready to keep executing at a high level in the time I've been. Whether you're talking about driving LINZESS growth, the team, we've got a fantastic commercial team that Tom has built and strengthened actually over the last year. It's executing extremely well. They've got new ideas. They're collaborating well. That's being driven. In the business development standpoint, we've got a fully aligned board with a fully aligned management team, with a number of strengths in the team. We've got a clear set of targets that Mike and Tom have talked about, and we've got the resources to focus on the people and the alignment to move fast on that. And the third is that you clearly saw the ability to sort of generate profit and cash that in 2020, and that sort of execution and delivery focus is as high as ever. So the team's really ready to keep executing. I don't think they're going to miss a beat. They might even step up the beats.
That's great. Thanks for all the color there. Appreciate you taking the question. Apologies for the line.
Our final question is from Boris Peaker with Cowen. Your line is open.
Good morning. I'm just
Hi, Boris.
How are you? Can you talk about the trend in gross to net discounting and the outlook for that over the next several years?
Sure. I'll ask Gina to maybe share her thoughts on that, and Tom may want to add some additional color too, I'm sure. Go ahead, Gina.
Sure. Hi, Boris. Yes, I'm happy to, especially since 2020 was, certainly a great year and one we were quite pleased with. Tom mentioned we originally guided to net sale price for the year. We actually did recognize price. If you think about, the year-over-year growth in net sales, it wasn't just due to the strong demand, it was also price appreciation as well. That price appreciation was really due to thoughtful plan design changes that we implemented at the beginning of the year, so the beginning of 2020, where, for instance, we were no longer exclusive on certain plans, but fortunate for us, we didn't see a dip in demand because of those changes. We also had, and that was the bulk of the change. We also had some small, I would say small unfavorable adjustments in 2019 related to gross to net, just, typical adjustments from time to time. but because they weren't repeated in 2020, it did add to some price appreciation for the year. So then, looking forward to 2021, we've guided to mid-single-digit price erosion for the year. That is also due to contract changes that we are aware of. We continue to see pricing pressure, mainly due to some competitive pressures, in addition to the fact that, Amitiza is going generic. But our strategy for demand growth hasn't changed. We continue to invest fully behind the brand, believe that it will continue for many years to come through demand. And at the same time, we want to focus on broad payer access, with an affordable copay, which is for most of our patients is $30 or less. So in order to maintain that broad access, there are times year over year that we need to, make changes to make sure that our patients can still access LINZESS at an affordable price. So that's the change this year. You have heard me say this before, and that I would expect price appreciation as the norm. I'm pleased with 2020, but I wouldn't expect it going forward. I do expect, continued pressure, even pressure throughout 2021. We've guided to the mid-single-digit price erosion, but, payers don't always wait till the contracts expire to knock on the door. So we'll just continue to monitor it and execute according to plan, right? Focus on demand growth and broad payer access at the same time.
Great. Go ahead.
Boris, just one last thought. And this was really kind of an awakening for us this year. As you know, the far majority of our major plans were, preferred unrestricted, meaning, we're one of one. And we made a couple of decisions last year to, forego, the exclusivity and move to, basically, one of two or even a non-preferred position. Yet we continue in those plans. We continue to drive growth, double-digit growth. So, I think it offers us some flexibility knowing where we are with these plans as far as other options that maybe we wouldn't have normally had. And I think it just speaks to how strong the brand is with regard to, the preference that physicians and payers. But I completely agree with Gina as we move forward. I think you have to anticipate, some price erosion, year on year, and which is a reason why we have to continue to drive demand.
Gotcha. Okay, that's very helpful. My second question is, I think not so long ago we were talking about a previously prescription option becoming over the counter,
Sure.
and how that was contributing to your price growth. Can you kind of, is that still out there? Is that still helping prescription growth, and maybe provide any updates on that altogether?
Sure. So I think we're talking. I think specifically you're talking about the removal of generic PEG from the prescription market. Is that?
Yeah.
Yeah. So there's no question at the end of last year we saw, not last year, the year before, 2019, we saw this removal and we saw a bolus and influx of prescriptions. But I think the big thing that we saw was the dynamic change in the market, because you've just eliminated the market leader as available by prescription. So if they're going to choose a prescription drug, we just eliminated an option, and obviously that had a significant impact in people's choice to LINZESS, because when patients are frustrated with OTC, the last thing they want is another OTC walking out the door. So not only does LINZESS have a great clinical performance profile and level of satisfaction, but now it's one of actually fewer options, with the exception of the recent new entrants into the market, which really are not differentiated at all. And, I have struggled to gain share, as you know. So, we've continued to see LINZESS thrive. The far majority of the business is coming directly from the OTC market, which is where it needs to come from. And we're continuing to increase our overall market share, in the marketplace. So I think it's this dynamic change of choice, which has also helped fuel the growth of LINZESS.
Gotcha. Okay, well, great. Thanks for the detailed answers to my questions.
Sure.
Our final question is from Jacob Hughes with Wells Fargo Securities. Your line is open.
Hey, guys. Good morning.
Morning.
Good morning.
Just a follow-up question on your guidance. If I just on your revenue guidance, I just take kind of the midpoint of your revenue guidance and take out the $10 million that you mentioned for other. It kind of implies collaboration revenues flattish or up modestly year over year. And I was just wondering, does that point to kind of a reduction on the commercial margin, or higher investment, or what's the explanation there? Thanks.
Gina, you want to take that?
Sure, of course. So one, we do expect LINZESS revenues to continue to grow over time. We also expect margin to continue to expand over time just through growing revenue, thoughtful investments. The investments have been, we've been investing fully behind the brand. If you take a look at the numbers this year, I think they're about $10 million less year over year. So I think, we can still fully invest behind the brand and make more thoughtful investments with a higher ROI as well. I would go back to thinking about it as we guided to growing LINZESS sales of 3 to 5% for the year, roughly same level of investment. And just remind you that obviously we get 50% of that increase, right?
Okay. All right. Thank you.
Hopefully that's helpful.
We have no further questions at this time. I turn the call back to presenters for closing remarks.
Tom, I just want, and the team again, I just want to thank all of you for great work in 2020. And I want to wish you the best of luck, Tom, as you move into the interim CEO, and of course the whole team to continue their great work and success. As I said in my remarks, I have full confidence of everything moving forward. And Tom, I'll give you a chance to have the last word, as you're going to be moving into the interim CEO role. Thanks for all your support over the last 2 years.
Sure. And Mark, I know I speak on behalf of the board and certainly the management team. It's been a terrific experience with you, and we've learned a lot from your leadership. I mean, think about what we've achieved over the last couple of years in really right-sizing the company, getting it focused, making it more profitable. And I think you're leaving it in our hands in very good shape. As the interim CEO coming in, I couldn't be more excited about the opportunity here. I think everybody knows I'm a big believer in LINZESS. I think we have a long ways to go with it, particularly with a healthy life cycle. And we have a great partner. I mean, AbbVie has turned out to be a tremendous partner and a new catalyst to help us, think even broader about the brand, both in terms of life cycle, but also, some of the innovation in the market, in the commercial space, which, we've invested in virtual selling in this hybrid model. The telemedicine area is very exciting, particularly in this category for this brand. And certainly, we have a very strong expert team to move forward. So thank you for everything, and I look forward to the upcoming year and making a very good decision with the board on the future CEO. Thank you.
Thanks, operator. That's it for us.
This concludes today's conference call. You may now disconnect.